Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the coal market. So this time in the weekly report we have tried to not bother you with a lot of statistics, sophisticated analysis of the charts, indicators and so on that tells us about the United States economy. So because mostly we have done this work in yesterday's Forex report where we have considered revision of the CPI numbers, why stock market is rising despite that we do not see new money printing and where the funds are coming to on the stock markets and what it really could mean for investors in this near term. In today's weekly report, we have tried to consider some scenarios that by the common opinion in general is treated as mostly as a taboo, is actually the scenario with very low probability. I'm speaking about the United States debt default. And actually, maybe you do not know, but actually United States was in the default 4 times in its really not long-term history. And last time it was in 1970 when the gold standard has been cancelled by the Nixon. And if you take a look at the default in a way of the modern time, in modern reality, you will see that really it's not really bad solution for United States. That could resolve a lot of problems, and the consequences might be not as horrible as it is suggested by just common opinion. And in today's weekly report, among some other subjects, we also have shown you how it could be could happen and could be realized. And actually it might be among the one of the possible solutions right now. Speaking about the short term and the performance on the gold market, we're coming in a very really tough week where will be lots of political events, as you know, speech from the Joe Biden in Poland, speech from the Putin, meeting in the Germany of the North Atlantic countries. All this stuff could really could make impact, especially on the gold market. We do not know what will happen, but from the technical point of view, we have actually the bullish bread and butter set up in place, because market with this downward action has reached a strong support after the long-term upward action, and this is the first strong support area that has been achieved within the 3 weeks, the crossing of the 3x3 moving average. So this potentially the situation for a solid bounce. Whether it will be just bounce to the 618 resistance or market will keep going higher and taking out of this top, we do not know. But at least if bread and butter indeed happens, we could count on reaching at least the 19 even area. So really solid potential right here. So I think that's worth of our attention as well. From the economical events, as you know, we will get multiple PMI numbers and actually what's more important, the Fed minutes. This might be important for the market. From the practical point of view, what we could do in the current circumstances. As usual, we have 2 options on the market. You could directly follow the weekly pattern. You could do this without paying too much attention to intraday performance, just taking the long position, hiding stop somewhere below the daily average sold, below the confluence area, and see what will happen. That's all. Whatever fluctuations will be around this, you do not care about it. If market indeed starts bread and butter, you will take the profit around 19 even, or you could take your position, keep your position for the further upward action, depending on what we will see. If not, this market will just collapse here. Then it will mean that we're going lower and market is ready for stronger downside action. As for the one event, as for the another, it probably will be some solid background, because as you understand, sharp reversal and upward action should be supported by the geopolitical or maybe economical event, as well as a breakout of the strong support area. So also hardly will happen occasionally. This will be some political or economical background for that. This is the first way. Second way is a bit kind of the fine-tuning for this trade. You could watch for direct bullish reversal pattern on the intraday charts. From that standpoint, the gold situation is very similar to the euro currency, and we have mostly similar potential patterns that may be formed. I'm speaking about the reverse head and shoulders. From that standpoint of view, you could wait a bit when the market will reach 1828, 1830 area, which supposedly should be the right arm of the hand and shoulders, and here to consider taking the position. That could save a lot of money, so because your stop will be just below the head, or even you could try to place it just below the 618 level. It's also possible, so it will be relatively small potential loss, but you will get all advantages of the possible brand body trade right back to the 19 even area, so it will be really great risk reward ratio. This is two options that you have right now. And additionally, yes, as usual, this pattern we will use as an indicator, because if head and shoulders fails and market will drop below the 618 level and start dropping below the head, it means that we are going lower, and that will change overall context on the market drastically. So we will be watching for downward continuation, start searching chance to go short, because brand body will be actually cancelled. This will mean that we'll go into the lower support area first, but also it might be more extended action in the midterm. So that's a few moments that I think we need to keep an eye on the gold market in the nearest few sessions.